Alright guys, welcome to ACY Boardroom. We use these for only very special meetings and for the webinars we do. Well, not actually webinars. We use these for proper in-house webinars. When people come to here, we have a huge, this can probably have hundreds of people here. So it's always good to be here. And as I've mentioned, we only use this for very special occasions. And today is a special occasion because we've hit 200 subscribers on the Telegram channel. And I've mentioned that yes, I would deliver my only and the only thing you need to trade on the Forex market. My only strategy that has been working since 2019, where we've built this combiner to other people like Anton Krill, Matthew from Prime Market Terminal, as well as Lucas from Indico, Brazil, Ramon from Indico as well. So we've built all this together, a little bit from everyone, a little bit from mentoring from everyone when we came up with this strategy. So I just want to mention something that everyone always asks me. Is trading easy? It can be easy if you know what you have to do. Like, I'm going to give you everything today, but it's not because I'm giving you everything that it's going to work for you. You need to understand what sort of trading do you like to do, because this is a swing trading strategy. It's something that, yes, you can put on a smaller time frame that won't change much, but you get more profitability, you get more risk reward, better risk reward, sorry, when you're applying this concept for a wider time frame, like a 4 hours a daily time frame. All right. Okay. So I got the board here. I'm going to be using this. I highly recommend you guys to get some notes, a paper, and etc. But yeah, I think that's all I have to say. So let's start it. Please subscribe to the channel. Give us a thumbs up. And if you're not yet on the Telegram, then you're missing contents like this. Go to the description of the video and click to get into the Telegram group. Now, let's go to the video. All right, so first thing, we have euro, dollar, pound, New Zealand dollar, Australian dollar. So let me note all of those currencies down. So we have euro, dollar. I'm not talking about the pair here, right? I'm not talking about euro dollar, pound dollar, dollar yen, and etc. I'm talking about each separated currency. All right, so I got euro, I got US dollar, I got the pound, I got this looks like more 6, but it's a G. I got the Australian dollar, I got the New Zealand dollar, I got Japanese yen, Canadian dollar, CHF. All right, so we got all of those 8 currencies. All right. That we have majors and minors. All right, we have major and minors. What does that mean to the Forex market? Major currencies, major pairs, right? So let me note these on this other side here, on a different color. So we have major and we have minors. All right. So the majors pair will be the biggest economies like euro, US dollar, and the pound, okay? And Australia as well. So euro dollar, pound dollar, Australian dollar against US dollar, and some others. Minors will be CHF, JPY, currencies that are less traded on the Forex market, okay? These are major and minors. What I prefer to trade, wherever there is volatility to be traded. All right, I don't pick, I want to trade euro, I want to trade dollar, I want to trade the pound, I want to trade this, I only want to trade that, on that, and this. No, whatever there is opportunity, I'm in. Whenever there is volatility, I'm jumping in as well. All right, if there is a good risk reward, I'm in. It doesn't matter if it's the Japanese yen against the CHF. It doesn't matter. If there is opportunity, I'm in. All right. And that's one thing that everyone has to understand. Like, people don't understanding that because they think that they have only to trade majors, they have only to trade minors. It doesn't matter. Do you think that the Swiss bank, do you think that the BNP Paribas, JP Morgan, do you think that those big banks are picking what they want to trade? No, they are making money whenever there's money to be made. All right? So this is it. So first of all, this is what I've came across. A lot of you have been talking to me like, I only trade this, I only trade that. Stop like this, right? You have to trade whenever there's opportunity. Right, so let's go ahead. I like to divide those currencies in countries, all right? Because this is only a currency because it has been using on a country. This is only a currency because there is monetary policy. There is a central bank behind it that can control how this will be. If it's going to be strong, if it's going to be weak, it's going to be higher rates, it's going to be lower rates. In this moment of the market that we are in 2024, some things have been changing, all right? It was really, really good to make some good opportunities on the market. There was plenty of opportunities on the market when we were starting the COVID, okay? When we were starting the COVID. Why? Simply because we had those countries building up inflation. So inflation was going through the roof. What would happen with the central banks? Central banks would have to hike interest rate. And once the interest rate is higher, there is more demand for that currency. And if that currency, there is more demand, then it's a bullish currency and it's not bearish. Therefore, we pair up with a bearish currency against a bullish currency and we long it or we short it, depending where the base is. Actually, that's another very interesting point, okay? Lots of people don't know, but we have one thing called the base and the quote, all right? So let me scroll all of these down. All right, perfecto. We say perfecto in Portuguese. All right. So you have the base and you have the quote, all right? Okay, what happens if the base is stronger? What happens if the base is stronger is a bullish market. All right, so what happens is that the market goes up. What happens if the quote is stronger? Well, happens that the market is bearish. And what happens if the market is bearish? Bearish, then the market goes down. Okay? Now, what happens if this quote is US dollar, okay? So just in your mind, think that this quote is US dollar, okay? So if this is US dollar, the US dollar is weak at this moment, and this is euro, what will happen with the market? If euro is strong and US dollar is weaker, euro dollar will go up, okay? Now, this is the only thing you need to know. And done. This is it. This is the only thing you need to know. What is the base? What is the quote? Which one is bearish? Which one is bullish? Put them together. It doesn't matter. It could be Japanese yen here. It could be US dollar here. It could be CHF here. And it could be US dollar here. It could be the pound here. And it could be the CAD here, the Canadian dollar. All right? It doesn't matter. You just need to find which one is bullish and which one is bearish. And then we're going to use a very simple approach to understand how we make this. And now I come to my second part. A lot of people don't have the understanding of how can you decide what to buy and what to sell. What is cheap and what's expensive, all right? Every time I talk to some of my friends from JP, from Goldman Sachs, they're always like, yeah, this is cheap. What they mean by that is, I'm going to long this, all right? They're not saying, well, we're going to long this. No, because they look at price, all right? The price is the important. I'm not talking about ICT. I'm not talking about smart money concept. I'm not talking about technical analysis. I'm not talking about anything that is on the mainstream. Because if that used to happen, that used to help, everyone would be finally consistent, all right? And you wouldn't be here watching this video. So let's grab to this, and that's where you have to pay attention, all right? One more sip to the water because it's a really hot day in Sydney, and yeah, I deserve. Just joking. All right. Now, the big moment. What I do, what I look, how do I interpret the market? How do I know if this is strong and that is weak? Very simple, fundamental analysis. But if you have been following me for a while, you know that I not only talk about fundamental, but I talk about context. And the context is the most important thing. Without context, fundamental is just data. And without the context, data doesn't mean any for us. Okay? So let's go bit by bit here. Let's start with the currency. So how do I like to do is currency. I'm going to probably do a little bit smaller, but I think you guys will be able to see. So currency. Basically, the currency is the country, right? And then just below that, we're going to have euro. And then we're going to have pound. And then we're going to have Japanese yen. And etc, etc, etc. So I'm not going to do everything because it's probably going to come down here. But I think that's already enough for us to understand what I want to say. So then it starts my analysis for each single of one. I'm not saying that it's going to be easy. I'm not saying that it's not going to have to do work. I'm not saying that this is like a feeding thing that I'm going to give it to you and you're going to trade tomorrow and going to have $1 million on your bank account. I'm not saying this. If this is your go, then revisit your goals, rethink about your goals, and then come back to here. All right? First thing I analyze on every economy is the inflation. Okay? Let me just do a bit longer here, because we're going to need it. More space on the board. All right. What I first look at is the CPI. All right. If you want to be even more precise, look at core CPI as well. Okay. If you want to be even more precise, look at core CPI. I have plenty of videos about talking about core CPI and what's the difference, but very, very quick and easy. Core CPI is a measure used by especially the central bank to see if they are able to control the inflation or not, because this takes off the energy prices and the food prices, because those two components on the normal CPI, the consumer price index, it's not controllable by the central bank. I mean, come on, how they will control food prices? If sometimes the chicken doesn't want to give egg, if sometimes the vegetables don't want to grow because it's too much sun or it's too much rain, they can't control. The demand and the supply will control the price itself. And the fuel, how they know where to extract, how the central bank will control the fuel extraction. All right, so it's very, very hard for them to control that. So having exclude these two items, the big two volatile items of the CPI, we have the core CPI, all right? And this is where the central bank can control the inflation. This is the measure they look to control the inflation, okay? Cool. Now, CPI, inflation, every country has a target, okay? Euro has a target. The UK has a target. Japan has a target. They sometimes can be different. All right, let me put a US dollar as well here. So we have one more example. US dollar, USA has a target for inflation as well. All right, everyone may have completely different targets But in this scenario, in this hypothetical scenario, you're going to have to go and search. I'm not going to give it to you. You're going to go and search what's the CPI, what's the inflation target for Europe, what's the inflation target for UK, Japan, USA, Canada, Switzerland, Australia, New Zealand, and it goes. All right? You can build an Excel, simply and easy. All right? Okay, so let's work as a hypothetical scenario that the CPI, the inflation target for these 4 countries, at 2%. All right, 2%. So 2% inflation target for Europe, 2% inflation target for UK, 2% for Japan, and 2% for USA. Okay. Now, we go and do our searches and we find out that the CPI is some way higher than the inflation target and somewhat lower than the inflation target. Okay, so I'm going to draw some random numbers on here, so you will understand what I mean by that later on. Okay, so this one is going to be, let me do it in green. This one is going to be at 4.5. Okay. Okay. 4.5. This one is going to be at 3%. This one is going to be at negative 1%. And this one is going to be at 5%. Okay. So we have 4 distinct inflation. We have at 4.5% for Europe, 3% for UK, negative 1% for Japan, and 5% for US dollar. Okay. Now, how do I set it up based on these criteria? All right. How do I set it up based on these criteria? What's good and what's bad for the currency? Right. We need to understand one thing. Higher inflation is good for the currency. Not good for the country, but good for the currency. Why? Because we know on the monetary policy that a higher inflation means that the central bank from that country will have to increase the rates. Why is that? Simply because they have to control the inflation down. They have to stop consumption. They have to stop the inflation to grow, people to spend. Therefore, they come with a rhetoric, a very simple rhetoric saying, things are expensive, but hey, you're getting paid more on your savings account. Right? That's what always they say. Okay. 4.5%, it's 2.5% higher. All right? So anything higher, double the digits higher, I'm considering it as a +2. Wait, what's +2? What's -2? Let's get it to it. I like to rank the economy. And now you get it, right? Now you're getting, I know. Because you have to find a way to rank and see what's bullish and what's bearish. Otherwise, how can you do the thing I've mentioned to you? What's base, what's quote? What's expensive, what's cheap? What do I buy, what do I sell? What's bullish, what's bearish? You rank it. So let's do a rank. Okay? Rank. My rank goes as follows. -2, -1, 0, +1, and +2. All right. This is the rank. -2 for very, very, very bearish. -1 for somewhat bearish. 0 for neutral. +1 to bullish. +2 to very bullish. Okay? I don't think I need to write these down because, as I've mentioned, get a notebook, write it down. I'm talking to you. So put what I've just mentioned. -2, very bullish, very bearish. -1, bearish. 0, neutral. +1, bullish. +2, very bullish. Okay? How do I rank this guy here at 4.5%? I rank this as a +2, okay? So let me change the color. Let me put in blue. So +2, bullish, very bullish, good era. GBP, 3%, it's higher, but it's 1%. So between 1 to 2, I would choose 1. So +1. Ooh, what about this one? Inflation target at 2%, but it's -1%. Japan, that's very, very bearish. So -2. Okay. US dollar, 5%. I don't even need to think about it. It's a +2. Come on. If euro was 4.5 and they have 2% inflation target, 2% inflation target on USA, this is 5%, it's +2. It's very bullish, right? Easy. Easy peasy lemon squeezy. All right, cool. Let me, I'm going to leave that there. It's fine. So you guys can have it. Okay. Now, after I look at core CPI, why do I go and look at it? Well, so many things to look at it, but I'm just going to give one more. And then, if this video, what do you think, Dave? 1,000, maybe 2,000 views? If this video hits 2,000 views, all right, share this content with everyone. Share. If this video hits 2,000 views, I'm going to upload the third part because this is the second part. All right, Dave, put the first part down at the description so everyone can go and watch the first part because that's my entry model. All right, and this is how I define what's weak and what's strong. So if this video hits 2,000 views in a month, it has to be in a month. Come on, Dave. Like, if it's on a 5-year, then it's too easy. If this video hits 2,000 views in a month, then we're going to do the third part and last part. And that's your road to finding good opportunities on the market. All right? All right, let's go. Last one. After I look at core CPI, I look at services PMI and manufacturing PMI. And I follow the same rank. See, that's so easy, right? It's so really literally easy. You can start trading today and you're going to sort of feel the effect. All right, ranking. Services PMI. All right, let me note it down here. Services PMI. And then we have manufacturing PMI as well. On my table, these two would be combined. Okay, I'm going to show you later how we're going to do this. But we don't have much space here. So services PMI and manufacturing PMI. Okay. Now, we have to understand something. Let me grab my phone here to have a look at and don't get it wrong. PMIs. So pretty much we have a very simple way to look at PMIs. We need to have same ranking, but we need to add one layer of complexity on this one. There is above 50, below 50, below 50 and coming back up, above 50 and going up, above 50 and coming down, below 50 and continue to go down. I know, it's lots and lots of things. Can I get this board for them? Yeah, cool. The only Forex strategy you need. Go and search around YouTube and tell me later. Okay, so I don't want to put this draw off, so I'm going to grab this one so everyone can see now. PMIs, okay? PMIs. We have manufacturing PMIs and services PMI. It doesn't matter which PMI, you can use the same rule, okay? So you got at 50, you got above 50, you got below 50, you got above and rising, above plus rising 50, and you got below 50 plus continue to go down plus downtrend. Oopsie. Plus down 50. And then you got above 50 and falling. And you got below 50 and rising. Okay. So let's go. Very simple. At 50, let me use the green one. At 50 equals to 0. Remember the rank there? This is the rank. At 50 equals 0. Below 50 minus 1. Below 50 and continue to go down, minus 2. Below 50 and raising, minus 1. Okay, above 50, just depends where. Okay, so very tricky here. Below 50, is it 49? Is it 48? Then it's a minus 1. Is it 30? Then it's 2, minus 2, right? Just sort of try to understand when you look to the PMI chart, try to understand what was the maximum, what was the minimum for the last 5 years, for the last 10 years. And then you can understand what you're going to go for 1 or what you're going to do for 2. But remember, anything below 50 can be considered as a recession for more than 3 months. Okay, so just bear this in mind. Above 50 plus 1, above plus raising, above 50 plus raising, plus 2. Above 50 and falling, it's going to depend, but I usually use plus 1. All right? This below 50 and raising, depending how stiff it is, it can be considered as a positive 1. Okay? And this above 50 and falling, how consider it to be down? Minus 1. All right, guys? So this is it for the PMIs. Let me move these down here. Give a sip of my water, and we're going to go for the last part. Now, we have inflation targets, but we don't have PMI targets, okay? We don't have a target of the PMI. We don't have a target for services PMI. We don't have a target for manufacturing PMIs. We only need to be above 50. And if we are below 50, things are not good, all right? So let's go for services PMIs and manufacturing PMIs here. Let's say that the services PMIs for Euro is at 52.1. And the manufacturing PMI is at 51. Okay. GBP, UK, the services PMI is at 48. And the manufacturing PMI is at 52. All right? Random numbers, guys. This is not real numbers, just randomly. Japan, 55 against 49. And then the USA is on 50 and 51. Okay. What are they scoring for each one of these? Pause the video, all right, and do it by yourself. And then once you finish it, put your comments, do your comments, I will check it, and then see if you get right or wrong, okay? But remembering, this is all context. Yes, this will work, but if you can implement that on a context. Right, so let me go with the blue one now. Let's go for the easiest one here, US dollar. At 50 means 0, so 0. 51, 51, but is continue to grow. What is this? A plus 2, okay? Now, Japanese yen, 55, that's really good, but it's stagnated at 55. It's not going up, it's not going down. I'm going to give it a 2. For 49, that's really bad, probably continue to go down, -1. Now, 48, that's really bad and continue to drop, -2. 52, +1. 52.1 and continue to go higher, +2. 51 and looking to go down, what do we do? +1. Okay? There you have it. And now we're going to get this core on here. +2, +2, 4, +1, 5. +1, +1, 2, -2, 0. -2, -1, -3. +2, -1. +2, +2, 4, 0, 4. So +4. Now, it's the last part, the last and the easiest part. Put the positives with the negatives, the zeros behind, don't trade those. And with the negative is possible, better, all right? This case is -1. So let's go for Euro, Japanese yen. We can check here, Euro, Japanese yen. Euro has 5, +5, Japanese yen has -1. So based on that, we can build, oopsie, forgot that, just a second. All right, cool. All right, based on that, can we build, does it exist Japanese yen against euro? It does, but it's uncommonly traded because the swaps and the spreads are huge. We call this exotic pairs, so we don't trade exotic pairs. We trade majors and minors. All right, Euro, Japanese yen. So this is the base, and this is the quote. What is what? Euro is 5. Is it strong? It's positive, strong. Japanese yen is -1, is bearish, is weakness, all right? Weak. What do? We long or we short? We long. So Euro JPY is a long trade at this moment. Guys, thank you so much. Please, if you have any questions, put down in the comments. I will be definitely happy to help everyone. And if this video gets to 2,000 views until end of the month, well, not end of the month, today is the 20th of September. If we get on the 20th of October with 2,000 views, I'm going to release the full spreadsheet for everyone. I see you in the next one, hopefully, with the full spreadsheet. Thank you so much. Subscribe to the channel, give us a thumbs up, and see you in the next one. Bye-bye.